Now, let's commence our trading journey, turning our attention to the USD and Japanese yen currency pair. So, what are observations at this point? Our trading approach will involve implementing the martingale method. Hello everyone, I'm Mary, and I'm thrilled to have you join this video, signaling your shared interest in trading just like mine. I've established this YouTube channel as a platform for sharing the extensive trading knowledge I've amassed over the years. And yes, I've acquired valuable insights, and I'm very enthusiastic about sharing them. Here you'll find a wealth of captivating and informative content, so don't forget to subscribe and show your appreciation by giving videos a thumbs up. Additionally, I maintain my own Telegram channel where I regularly provide precise trading signals. If you're keen on collaborating, consider subscribing to my Telegram channel. The link is conveniently located below this video. Now, let's commence our trading journey and delve into the current market dynamics. As you can see, my chart is brimming with information. Turning our attention to the USD and Japanese yen currency pair, we encounter a reasonably promising situation, albeit somewhat obscured. To enhance our comprehension, I'll introduce the alligator indicator to our chart. So, what are observations at this point? The alligator indicator signals a robust upward trend, but the price exhibits erratic behavior, prompting caution with this particular pair. Shifting our focus to the British pound paired with the US dollar, we find ourselves in a more intriguing scenario. The chart here showcases lower volatility, setting the stage for a trade on this currency pair. Our trading approach will involve implementing the martingale method, a concept I've been eager to demonstrate actually. So I'm initiating a trade with a downward projection. Observe the RSI indicator currently positioned in the oversold zone coupled with the fully open jaws of the alligator, indicating a robust downward trend. The entry conditions couldn't be more favorable. Furthermore, I'll be employing the martingale trading system, a strategy that entails compensating for losses. Should this trade conclude with a loss, which I'm hopeful won't be the case today, I'll promptly initiate another trade with a doubled stake. In the event of successive losses, I'll continue the pattern, progressively increasing the trade size. It's really important to note that only one profitable trade is required to recover losses and turn a profit. By the way, a noteworthy development is unfolding on the Euro and Great British Pound currency pair, a double top formation. This presents an opportunity for a bearish trade. This pattern is renowned for its effectiveness, succeeding in approximately 9 out of 10 cases, if not more. It's prudent to size the opportunity rather than miss out due to risk conversion. Consequently, I'm initiating a trade on the Euro and British Pound currency pair. A 90% payout rate is undeniably favorable. I'll enter a trade for $600 with a 5-minute duration, strategically waiting for a slight price increase to secure a more advantageous entry point. Typically, a brief waiting period is customary. As the price experiences a minor uptick, I seize the opportunity to execute the trade, opting for a 3-minute duration as the 5-minute interval carries a potential risk of losses stemming from market corrections. Now, returning our focus to the British pound and USD currency pair, the price remains relatively static, oscillating within a 20-point range. It's admittedly a subdued movement. The price simply fluctuates within this narrow range. Considering the current market volatility, a 20-point movement can be categorized as minimal. In a noteworthy development, the larger chart reveals an accumulation phase. I've demarcated this phase in red. Accumulation phases offer favorable trading opportunities provided you possess the time and patience to await an appropriate trading signal, specifically an exit from this accumulation range. And when the price remains relatively stable for several minutes, simply delineate a horizontal channel. Then wait for the price's departure from this channel. If it ascends, consider an upward trade. If it descends, opt for a downward trade. This represents a straightforward trading strategy, often yielding positive results, which is why it's a strategy I frequently employ. We're now down to the final 16 seconds of this trade. The price has nearly retraced to the opening level, and just a bit more drop could turn this into a profitable outcome. Merely 5 seconds left. Unfortunately, the trade concluded with a loss. Now it's time to put the martingale strategy into action. I'll wait for a slight price increase and then initiate a downward trade. Although the $300 trade resulted in a loss, our analysis remains valid, so by opening the same trade for $600 and having it succeed, we can recover the loss and secure a profit. It's a straightforward approach. I've executed the trade right from the upper accumulation zone, an ideal entry point given the circumstances. Furthermore, the alligator indicator shows no sign of closing its jaws, indicating the potential for another downward entry and profit. Most likely, the price will bounce off the upper accumulation zone within the channel and head downwards, requiring just a few points for a profitable outcome. Now let's take a look at the right-hand menu. We have 40 seconds remaining for the Euro and British pound trade. Meanwhile, the pound and USD pair still has 2 minutes on the clock. Oh, the price has broken out of the accumulation phase to the upside. Interestingly, this presents an opportunity to demonstrate the effectiveness of the martingale method. It ensures consistent profitability even with a 50% win rate, meaning one trade in profit, one in loss, one in profit, and so on. Employing the martingale, you'll end up in profit. For example, if you start with a $300 trade, a loss would prompt a $600 trade next. If it closes in profit at a 90% payout rate, you'd earn $440, offsetting the $300 loss and netting a $240 profit. This is a straightforward approach to profitability with an average strategy featuring a 50% win rate. By the way, the Euro and Pound trade concluded with a profit. Most likely, the Pound and USD trade will end in a loss once again, which is currently an exciting prospect as it will provide a practical demonstration of the martingale method. There is about a minute left until this trade's conclusion, so let's wait for the outcome. As you can see, the trade closed with a loss. Following the martingale method, I'm initiating the next trade at $1,200 for a duration of 3 minutes, anticipating a decrease. Additionally, on the 15-second time frame, we observe a mirrored resistance level from which the price rebounded. This trade, with a 100% likelihood, should conclude with a profit. Despite facing 2 losing trades on this pair, resulting in a potential loss of $900, I'm ending up with a rather substantial profit thanks to the martingale and offsetting strategy. That's the way it operates. Thank you for all your attention, and don't forget to subscribe and like. Also, please make sure to subscribe to my Telegram channel, where I share accurate signals. If you're interested in collaborating with me, please subscribe to my Telegram channel. The link is provided below this video.